Yo, what is going on, everyone? This is Juan, back with another video, and in today's video we're going to be going over how you can utilize the 200-day moving average, this yellow line. Don't want to make it too complicated for you, but this yellow line and volume, these little lines up here, down here, how to utilize these two to find potential swing trades. Now, if we look at the 200-day moving average, it is used as support and resistance for Boeing. We're looking at Boeing. I don't want to confuse you guys. This is very simple. We're looking at Boeing, and this is a 200-day moving average. So now that we got that out of the way, we're going to be looking at how you guys can use this. So here we can see that Boeing breaks the 200-day moving average on the downside with volume. We see a break, we see a test back up, rejects it, and what happens? It closed below the 200-day moving average. So this is a good indication that Boeing is good for puts. Now, if you would have bought some puts around this area when Boeing was coming down hard, and you would have just held your profits and let them run, boom, you would have made bank on this heavy hit that Boeing took. Now, this is way back then, but let's go a little bit more to the present. So here we go. Around this, I want to teach you guys a little bit more in front. Yeah, right here. I even drew it out for you guys, but let's go a little bit more back. We can see that Boeing has been using 200-day moving average as support and resistance. Here, it breaks, rejects it, comes all the way back down. Here, it rejects, and what happens next? It rejects it. Here's a good time for puts. Boeing comes all the way down. And what does it have to do with the 200-day moving average? It rejected this level here. Large financial institutions use the 200-day moving average as a direct indication of when they should invest in a certain stock. They're smart with their money. Now, what happens here? Boeing rejects the 200-day moving average. The next thing that happens, boom, it crashes. And if you would have held your profits here, held Boeing for puts, you would have made even more money. Look at all of this. It gaps down and the whole day just getting clapped. Now we see it here. We see Boeing here break with volume to the upside. So now instead of selling, banks are buying. Here we see that it breaks here, rejects, and then breaks here with some volume, comes up, holds up. The most important thing that it holds up. Circled it here, don't want to confuse you guys. This is the volume. Here it holds above and rejects resistance. Comes back down to support, bounces. Here is a good time for calls because now it held above the 200-day moving average. 200-day moving average, it holds above, it finished above. What happens the next day? It gaps up. Now a good time to take your profits would be around here. Why? How do we even know? Because this is a strong resistance level back here. This is where you would know when to take your profits, because if it doesn't break this next resistance, then obvious that it's going to come back down. Now, it's a little bit more advanced, but this is where you would take your profits. And that's how you would pick it exactly at the top. Now we see it bounce, hit support, come back up. We see it right here do the exact same thing. What happens the next day? Finishes above the 200-day moving average. So what's going to happen? Boom, gaps up. So it gaps up, and here we see Boeing in a giant bull flag. I drew it out for you guys. Boom, giant bull flag. Bull flags usually break on the upside. Now, anything can happen in the stock market. Any news can come out, anything can happen. So Boeing could even break on the downside. That could happen, and it has happened. So trust bull flags that they're very bullish, but at the same time, take it with a grain of salt because it is risky. Now the next day we see Boeing gap up, and we see it continuously come up. Now, never trade the first 15 minutes of the market open, but here, if we waited 15 minutes, each candle is 5 minutes. We're on the 5-minute chart. I'm trying to teach you guys. If I'm going slow, if I'm over-explaining, it's just because I care about you guys and I want you guys to succeed, and I want you guys to understand what we're doing. So here, 5 minutes each candle, 5, 10, 15 minutes, holds above the 200-day moving average. So what's gonna happen? We go in for calls. We buy some calls. I actually called this out, and I actually called this out the same day also. I called this out and my members were able to make decent money here. Now, some people let their profits ride, and what happened? It finished above the 200-day moving average, and what's gonna happen the next day? it's going to gap up again because now it's still above the 200-day moving average. It's not like it's going to gap down because banks are more inclined to buy when it's above the 200-day moving average. If it finished below, obviously that's going to gap down, but it finished above the 200-day moving average. So that means that banks are more inclined to buy. Now, anything can happen, but it's very, very likely that we will see gap up or we will see Boeing come to the upside. Now here, we can see that Boeing gaps up. We actually made like 300%. The people that held made about 100 to 300% on their investment, took profits around this area. And how would we know when to take profits? The same thing, strong resistance from the past. We see it rejected here. This is a good time to take profits because it's resistance from the past. And now we see it come all the way down and retest. Like Boeing actually wanted to go even higher. And this, if it broke here, it would be a good time for calls, but it rejected. And what's gonna happen next? It rejected it twice. So that's a double top, which is bearish. So we see a double top, boom, is gonna come to the downside. Now we see it stop around this area, the same area here that it opened up. It didn't want to fill the gap yet. Where's the gap? Here's the gap right here. Boeing did not want to fill this gap yet. Now we see Boeing bounce around this area. And then finally we see a break with volume. You see this break with volume here. Let me circle it for you guys, for all the beginners here. We see a break with volume, and of course it's gonna fill the gap to the downside. We see it fill the gap, boom, comes all the way down, and it breaks the 200-day moving average. Now, if you would have gone in for puts here, let your profits ride, now it's below 200-day moving average. So what's gonna happen the next day? More than likely, it's gonna open down. And this day, it actually ended up opening to the downside. But like I said, it's risky. Although it opened on the down, although it ended up below the 200-day moving average, it's still risky. But it's very, very likely that it will. It's about winning more than losing more. If you can win more in the stock market, you will make more money. If you consistently lose more, you're gonna lose more money. If you consistently win more, you're gonna make more money. So it's about knowing how to increase your chances of always being top of your game and always winning in the stock market. Now here, we see Boeing finish above the 200-day moving average. So what's inclined to happen on coming Monday, because it's Friday, Boeing opening around this area, or at least Boeing opening around this area and retesting the 200-day moving average. Now, if it breaks on Monday, it's gonna end up in these levels. But if it keeps going up, it's gonna come back up to these levels because the 200-day moving average, once again, direct indication for large financial institutions of when to buy. And basically, guys, that's it. That's all I wanted to show you guys for right now. Nice and quick, simple video of how to use the 200-day moving average. Explain to you guys a little bit about Boeing and how it works a little bit. And now, if you guys enjoyed the video, be sure to leave a thumbs up and have a productive rest of your night. Rest up and let's get this money on Monday.